Victims of Haiyin have continued to protest, recently gathering at the Shanghai Public Security Bureau to seek justice. The issue remains unresolved, and the banking industry, once considered stable, is now experiencing unprecedented turmoil, signaling a wave of collapse. On July 6, a video posted on X showed a large crowd of Chinese citizens gathering outside Jiangxi Bank, protesting loudly. The post stated, "The head office of Jiangxi Bank denied rumors in relation to closure 2 days ago, but today, July 6, Jiangxi Bank has officially collapsed. Depositors gathered at the bank entrance to defend their legal rights." One person commented, "The domino effect has begun. The collapse of real estate and banks is starting. The Chinese Communist Party can no longer salvage the situation and is self-destructing." As early as June 29th, a video posted on X showed a large crowd gathered outside Jiangxi Bank, shouting desperately, "Return our money! Return our money!" Authorities dispatched police to make arrests. The post noted, "Victims demand their money back, while the bank claims to be having normal operations. The rumored collapse of Jiangxi Bank, dragged down by Evergrande, can no longer be hidden." The financial storm triggered by the successive collapses of Chinese real estate giants is causing significant shockwaves in China's financial industry, potentially leading to a major collapse in the banking sector. Jiangxi Bank staff claimed that on June 29th, they gradually restored normal withdrawal functions for users and emphasized that all deposit and withdrawal operations were normal. However, it seems that some people are still unable to withdraw their own money. On July 4th, the local Financial Supervision Bureau of Nanchang City in Jiangxi Province issued a notice refuting rumors, stating that a small number of people gathered at the head office of Jiangxi Bank and posted false information online, suspected of disrupting the order of financial institutions. They also threatened that those involved will be severely punished by law. The Chinese government proceeded to block news of the Jiangxi Bank collapse, but the public did not buy it and went on criticizing officials. Whenever a problem arises, they immediately try to distance themselves from it. What do you mean by false information? Why don't they mention the reason why people gathered up? They only call it a rumor without explaining the cause. Some other comments read, "Not explaining the situation but already assigning blame," or "Poor supervision but excellent at blaming." However, just 2 days after the CCP officials refuted the rumors, news of Jiangxi Bank's closure emerged, proving the so-called rumors to be accurate. China's economy has been on a downward trend in recent years, with consumers becoming more reserved with their spending. People have been depositing their hard-earned money into financial institutions, fearing a future without money. However, incidents of people being unable to withdraw their deposits have persisted, causing widespread panic. Public records show that Jiangxi Bank was established in December 2015 as the first provincial corporate bank in Jiangxi Province, previously known as Nanchang City Commercial Bank, founded in February 1998. Annual reports indicate that the top 10 shareholders of Jiangxi Bank are mainly state-owned entities. Besides being dragged down by Evergrande's collapse, another reason for Jiangxi Bank's crisis, according to reports from CailianPress.com, involves the Nanchang Private Financing Registration Service Center Company, referred to as Mingrongdeng Center. Economic Observer reported on June 1st that Mingrongdeng Center, established for 9 years, recently experienced widespread default on its recommended investment products, leaving many investors unable to recover their funds and due interest. The crisis affected over 2,200 investors, involving tens of billions of yuan, primarily local citizens of Nanchang, especially those aged 60 to 90, and investors with 1 to 2 million yuan. The center's operations have since been suspended. However, Nanchang's local Financial Supervision Bureau officials claim that Jiangxi Bank has no relationship with Minrongdeng Center other than being its account opening bank. Additionally, internal corruption within Jiangxi Bank is alarming. In recent years, multiple high-ranking officials have been dismissed, including former chairman Chen Xiaoming, former deputy president and board secretary Shu Jihong, along with party committee member and deputy president Yu Jian. who is currently under investigation for serious violations of discipline and law. Coupled with the bank's annual decline in net profit, its profitability is increasingly questioned, which may also be a significant cause of the crisis. If Jiangxi Bank's case is considered a local crisis, then the collapse of a state-owned bank would completely shatter people's confidence in state-owned banks. On July 4th, the Changchun branch of the Agricultural Bank of China closed, with many people gathering at the bank entrance to seek justice. A video uploaded by a citizen stated, "Such a large bank closed its doors just like that. This is the head office of the Agricultural Bank of China in Changchun, and it has closed." The Agricultural Bank of China is one of China's 4 major state-owned banks. If a branch can collapse, does it mean this is the only problematic branch? Bank closures undoubtedly make ordinary depositors the biggest victims, but news of large-scale pay cuts or layoffs at banks continues to emerge, indicating that employees are also suffering, and these banks may each be a financial time bomb waiting to explode. Ping An Bank, known as a rising star in China's banking sector, is reportedly undergoing massive layoffs as of July 6, causing a significant stir in financial circles. To cut costs, Ping An Bank is transferring over 100 employees from its Shanghai office to its headquarters in Shenzhen. This move affects departments such as credit cards, consumer finance, and financial markets. Employees unwilling to relocate are being offered severance packages, which many view as disguised layoffs. Insiders revealed that the relocation process is on a tight schedule, with all necessary procedures to be completed within just over a month. However, differences in subsidy policies between Shanghai and Shenzhen have caused concern among employees. For those with mortgages in Shanghai, moving to Shenzhen means not only bearing the rental costs there, but also potentially facing a situation where their income may not be able to cover the additional expenses. As a result, some may choose to resign, leading to what is being called a relocation-style layoff. In early May, Ping An Bank announced a salary cut for all employees. Several employees reported to the media that their performance bonuses for that month had been significantly reduced, ranging from 10% cuts to complete elimination, affecting a wide range of departments. Additionally, China Construction Bank, one of China's 4 major banks, has implemented large-scale salary cuts, causing a strong reaction throughout the banking industry. On July 1st, Reuters quoted 2 insiders stating that China Construction Bank, the country's second-largest state-owned bank, had reduced salaries for staff at its headquarters by at least 10%. Shockingly, salary cuts for executives and most branch staff will be even more significant. A staff member at Shenzhen branch of China Construction Bank recently revealed to Radio Free Asia that their salaries were cut by 20% at the end of last year. Quote, "Branch in Shenzhen, Zhuhai, Dongguan, and other parts of Guangdong saw a 20% reduction last year, and some employee benefits were also lost. Sometimes we even have to work overtime." End quote. A middle-level manager who has worked at China Construction Bank for 15 years expressed his distress. "We always thought state-owned enterprises were secure jobs. We never expected this to happen. After so many years of hard work, is this the outcome?" The South China Morning Post reported on April 1st that the 10 major state-owned banks collectively slashed salaries and demanded employees to return nearly 100 million yuan in bonuses. Bloomberg reported on June 27 that in response to the CCP's call for shared prosperity, several of China's largest state-owned financial companies have started implementing strict salary cap policies. Sources say that several of China's largest financial groups have asked executives to forego deferred bonuses, and some fund managers have even been asked to return salaries from previous years to comply with the 2.9 million yuan pre-tax annual salary cap. In recent weeks, state-owned enterprises such as China Merchants Group, China Everbright Group, and CITIC Group have communicated these directives to their employees. According to China Business Network, citing Wind Data Platform statistics on April 11th, the average salary reduction for bank management in 2023 is 13%, with some senior executives facing cuts as high as 40%. CICC, one of China's largest investment banks, had earlier reported significant salary cuts for employees, with basic salaries reduced by 25%, affecting over 2,000 employees. Last April, CICC had already cut employee bonuses by up to 40%, but such a substantial reduction in basic salaries was relatively rare. Someone commented and said, "It seems no industry is spared. Whether you're ordinary or extraordinary, everyone is feeling the pressure of loans. High-income earners are stressed and low-income earners are stressed too. How do we get here?" Not only are major banks in trouble, but the large-scale restructuring of small and medium-sized banks also signals unprecedented challenges for the entire industry. Reports indicate that over 80 small and medium-sized banks have undergone mergers and restructuring in the first half of the year alone. Shockingly, within just 7 days of leading up to June 21st, 40 rural small banks were either absorbed or dissolved. Notably, Liaoning Rural Commercial Bank plans to integrate over 60 small banks in just over a year, a speed and scope rarely seen in China's financial history. A financial analyst exclaimed, "It's like playing a financial version of the big fish eating the little fish game. But the problem is, once all the little fish are gone, can the big fish survive?" According to China Financial Stability Report 2023, from the People's Bank of China, there are currently 337 high-risk banks in China with total assets of 6.63 trillion yuan, primarily small and medium-sized banks. Given the typical underreporting by the Chinese government, the actual number of high-risk banks is likely higher than officially stated. An article by The Economist on July 4th noted that even during the worst deposit loan crisis, Chinese banks have never disappeared on such a rapid pace. The report highlighted that since 2019, several medium-sized banks in China have collapsed, but the most complex and problematic are rural small banks. China has about 3,800 such rural banks, holding 55 trillion yuan in assets, which account for 13% of the banking system. These banks have long suffered from poor management and a large accumulation of bad loans. Many have extended loans to real estate developers and local governments, making them vulnerable to the real estate crisis. In recent years, some banks revealed that up to 40% of their loans are non-performing. Critics argue that merging dozens of bad banks will only create larger, worse banks. The greatest concern for the CCP authorities is that the collapse of poorly performing small banks could directly threaten social stability. In 2022, the massive fraud at Henan Village and Township Bank led to depositors to protest on the streets. Authorities responded by dispatching police to maintain order and arrest the protesters. This incident remains unresolved. Public concern centers on whether depositors' savings will be used to cover bad loans or corruption losses during the bank mergers. Most depositors are middle-class or elderly individuals who rely on their savings for retirement and to support their children and grandchildren. These people benefited from the CCP's reform and opening up and are its staunch supporters. If their savings disappear, they and their families will face a survival crisis, likely sparking a strong wave of resistance. A banking insider revealed that the actual situation might be worse than official data suggests, with some banks' non-performing loan ratios exceeding 40%, hidden through various means. This is like a ticking time bomb that could trigger a financial system meltdown at any moment. For example, someone recently revealed on X how banks hide bad debts. In the best-performing branch of China Construction Bank in Henan, employees are pressured to meet targets by using their own money to buy deposits or loans at the end of each quarter. This time, at the end of June, employees were even asked to pay off overdue loans for customers. Each branch was given several thousand yuan for this task, which was framed as a, quote, political mission, end quote. Despite finding it absurd and a violation of employee rights, most branches complied due to relentless pressure from the departments and leaders. After completing the task, another batch of similar tasks was issued. Some employees who couldn't afford it resorted to using credit card loans to pay. This distorted practice highlights how banks have become increasingly dysfunctional and exploitative. The broader economic downturn in China has led to the emergence of professional debtors, forming an industry chain. Black market intermediaries collude with bank insiders to help debtors obtain large loans fraudulently, which are then cashed out and split among them. These debtors stop repaying, become deadbeats, and exacerbating the already severe issue of bad loans in banks. China's banking crisis acts like a mirror reflecting various economic problems, from local small banks to national giants, and from ordinary depositors to elite executives. Everyone is struggling to survive the storm. A financial analyst on the YouTube channel Cold Eye noted that real estate and banking are China's two main pillars. The rapid collapse of the real estate sector, which also has financial attributes, suggests that many loans are secured against real estate. As property values fall and unsold homes increase, these underlying assets become problematic, potentially triggering a financial crisis. Many banks have been dragged down by real estate, particularly mortgage and developer loans, and some investment products. This indicates that China's banking sector is on the edge of a dangerous cliff, mirroring the broader economic difficulties. The bursting of the real estate bubble has plunged many developers into severe debt crises, heavily impacting banks, their main creditors. At the same time, slowing economic growth has reduced corporate loan demand, further squeezing bank profits. This vicious cycle seems to be worsening, with banks tightening credit to control risks, which in turn stifle economic activity. And economists express deep concern. It's like a vicious cycle. Without credit, the economy can't recover. But if the economy doesn't recover, banks won't lend. It's like we're walking on a tightrope, and any misstep could send us plunging into an abyss. Western financial institutions are also affected by China's economic slowdown and declining capital market activities, leading to significant layoffs in their China divisions. Morgan Stanley recently announced its exit from banking operations in Shandong province, including Qingdao and Jinan cities, due to deteriorating non-performing loans. China's economy appears to be in a dire predicament.